we want to start with something a little light to kind of set the stage here. But the top, we'll call it slide, is sort of indicative of a political cartoon of how, especially now, this is sort of timely, how investors are looking at the market we're in, which is there's a bull on stage. And what does the bull represent? It represents an up market, right? A rising stock market. And the bull is taking a bow, whereas the bear, representing the down stock market, is waiting in the wings, saying, is it time yet? And so it sort of underscores the fact that, wow, there's a term, rising tide lifts all boats. And that's sort of where we are right now, and that the equity markets are rising. We're seeing stocks at all-time highs, but there's always that fear waiting in the wings that we've got the bear waiting to take our money away. So we're going to talk about sort of how to look at the stock market, what are the components of the stock market, and then look at how you can use stocks plus other assets like bonds to diversify so that that bear isn't so scary waiting in the wings. And the second one, sort of, if you read through it, the punchline is, what about diversification? And I don't invest in anything I can't spell. Well, it's speaking to there are all these theories that are out there, and I can I know how to buy at the bottom, I know how to buy stocks here, I know how to trade. Well, what we're going to talk about a little bit today is diversification and what that means, and why the gentleman on the left is sort of the smart one in the group, whereas his colleague there thinks that he is. So.
I think the one on the right was 100% Apple stock, right?
Yes, 100%
Okay.
Apple stock.
All right.
Well, that's interesting that you say that, because I met with a client recently. I just want to give a quick story.